Hi everyone, let's go over my Elliott wave scenarios on Bitcoin, starting with the bullish scenario where we're looking for a multi 1-2, 1-2, 1-2 currently inside the green wave 3. After the green wave 3, however, we are still looking for two more pushes to the upside as we want to see a green 4, green 5, yellow 4, yellow 5. Now what you're going to be looking for this wave 4 is a sideways range that is preferably the same size if not longer than your green wave 2, which is most common. As long as price is creating very short ranges, the probabilities are higher that you're still working on this wave 3 and you still have a wave 4 to come at a later stage. In other words, higher prices. There are two tools that I recommend to use which will give you a better idea of when a wave 4 might be forming. First of all, the trend-based fib time tool. First click on the candle for your wave 1 here, second click is the candle here that created your green wave 2, and then the third click is the candle that creates the high. Then you toggle on the 1 over here, and the moment price creates a range that gets to the 1 or surpasses the 1, you have to be aware of that range being a potential wave 4 in green. The second thing you can use is a parallel channel. You take the channel from the high of your green wave 1 to the current high on the chart to the low of your wave 2. And this is called a trend channel. Now what you're looking for in this case is the trend channel to break. So only once the lower trend line here is broken, it increases the probabilities that the range that you're looking at is a wave 4 in green, and then you're still looking again for a wave 5 in green and then another 4 and 5 in yellow. The invalidation for this scenario is price moving to the downside, touching 66.7k. Now on a 4-hour time frame, we have the potential here for another extra 2 1-2s. So in this case, you now have the yellow 1-2, the green 1-2, but you can see that locally here, price moved towards the upside with an increased amount of volume. Therefore, we preferably count the latest structure to the upside with the highest amount of volume as a wave 3. And that is what we do in this scenario here. So we then have a 1-2 in blue, and then we look for a 3-4-5 in blue. And when the blue 5 is finished, that is the moment we finish the green wave 3, right? So the blue count is a subdegree of the green count. And then inside the blue wave 3, we have the white count. So we have our wave 1, 2, 3, 4, 5, with currently the white 3 having the highest amount of volume in the local trend here towards the upside, which is also what we like to see. Now you can see that the invalidation for these 1-2s here is a bit higher at 78.5k. And you can also see I put a 618 on my chart, and the 618 is taken from the low of the white 2 to the high of the current high on the chart, really, because the 618 is an invalidation for wave 4. You take it from 2 to 3, and then if price would retrace to the 0.618, currently sitting at around 82.7k, then you invalidate a wave 4. The bearish scenario on the daily time frame is a flat structure. However, it has now significantly reduced in probabilities. It was already the lower probability scenario anyway, but a good Elliott wave analyst of course always needs a bullish and a bearish scenario. And now that price here touched the 1.618 for a blue wave B in a flat A, B, C, it significantly reduces probabilities because the 1.618 in a flat wave B is a uncommon / rare target. The moment you hit it, you're gonna give preference to other structures like the bullish 1-2. It is not a hard invalidation, it's just a target that you do not generally see for a wave B in a flat 3-wave A, a 3-wave B, and a 5-wave C. So the probabilities for this scenario are reduced. Only if price would really move to the downside impulsively and moves below 66.7k can we really start considering this scenario. Looking at the 3-minute time frame, which is a time frame I do not often visit, I want to talk about the volume here in the low and the green line. So you can see that we have a local move to the downside and the highest amount of volume is in the low. Now, if this is a bearish structure to the downside, meaning an impulsive move to the downside, then as we know, most of the volume tends to be in a wave 3 of an impulse, which is by far most common, which means that the ranges before the highest volume move are counted as wave 2s, which also means that if price is going to move above 88.1k, it invalidates a multi-1-2, the potential of having a 1-2, 1-2, and then another 1-2, and a big move towards the downside. In other words, if price would move above 88.1k before taking out this low, it increases the probabilities that this structure is corrective in a zigzag family structure, which therefore is bullish, unrelated to what then comes after, as the probabilities are higher to still take out the high, right? So even though it's like the 3-minute time frame, you can use the 3-minute to come up with a bit of an idea from an Elliott wave point of view. If we look at the CVD divergences, then at the moment there are no bullish nor bearish CVD divergences on the chart. All of these CVD divergences here already played out. Of course, in a bull trend, the bullish CVDs are far more interesting than the bearish ones, and all of them have played out. Of course, we had basically bullish CVDs the moment the 49k low was made, bullish CVDs over here, and then they just kept stacking, of course, as price moves to the upside, which is exactly what we like to see, as it shows there is absorption of market shorts with limit long orders and eventually pushing price towards the upside. Now we need to wait for a bigger local range to really have a CVD reading, as at the moment this is a very, very young range. As mentioned, I don't really tend to go to very low time frames. I prefer the 15-minute usually as a minimum time frame, and you can see, well, you know, we have a bit of a move down, but that's it. We don't really have any range yet. Now we do have some news this week, not today though. So tomorrow, Wednesday, November 13, we have some high impact news. Make sure you trade safe, might be very volatile. And then finally, the probabilities. Well, on a weekly time frame, as shown yesterday, we're still looking for bullish continuation. On the daily time frame shown in this video, a multi-1-2 has a higher probability than the bearish flat structure. So therefore, on the number 1 position, we have the multi-1-2. On the 4-hour time frame, which is what I showed you here, we are also keeping an eye on this multi-1-2 here, 1-2, 1-2, and then 3, and then still looking for higher prices to come on the 4-hour time frame. Keeping an eye on that 618. If touched, look for another 1-2 or the potential of a bit of a bigger retracement. But at the moment, probability is higher just to look for the 1-2 because we didn't hit the 0.618, right? And then on the 15-minute time frame, or actually the 3-minute time frame, the probabilities at the moment are a bit higher that the move to the downside is corrective due to the 3-wavy shape structure to the downside. If you go to the 3-minute, I'm not sure if I really showed it in detail, but you can see here from the high, it looks better as a 3-wave structure to the downside. If this low would have moved below this low, then there was a potential argument of 1, 2, 3, 4, and then a wave of 5. Now it just looks more 3-wavy. If this is a 1, 2, 3, 4, 5, then your wave 4 overlaps with 2, which is not really, or your 1, I mean, which isn't allowed. But then again, it's very low time frame. It's more interesting to look at 88.1k, which are also right over here, right? If price takes 88.1k, the probabilities increase that this move down here is corrective, which in the end is bullish, right? We are currently at a little bit of resistance here on the chart. You can see the green box that I have here sitting between 88.4, 88.2. So let's see what price is gonna give us today. I hope this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.